Nifty Bank is the one which is at a record high after strong results coming in from HDFC Bank and ICICI Bank. They've been doing extremely well earlier as well, which is why the gains on those two counters are relatively muted as compared to the other stocks which are doing well. But be that as it may, how the numbers were and what the outlook is, Abhishek joins in with more. Abhishek, start with HDFC Bank and then ICICI Bank.
Well, strong core operating profit was seen with respect to HDFC Bank. The P&L with respect to ANA and PAT is a beat on our poll. Now, core operating profit grew by 20.5% YoY and about 4.9% quarter-on-quarter. Remember that by core operating profit, I mean operating profit without treasury gains. So, 7-quarter high net interest margin on total assets, which came in at 3.54% versus 3.43%. Even if you remove the one-off that they have over here with respect to 700 crore of one-time income, the 3.45, 3.46% that you have looks pretty good with respect to 3.43% in the previous quarter, as analysts were anticipating a decline in net interest margin, but it has actually improved for them. Cost to income ratio or operating efficiency is one of the best that you are seeing in the last 4 quarters. Annualized slippage ratio is at 5-quarter low of 1.15% versus 1.4% in the previous quarter. Overall, the slippages have declined by nearly 15% quarter-on-quarter. Asset quality continues to remain impeccable for them. Gross NP ratio and net NP ratio have improved and are one of the best in the industry. With respect to ICICI Bank, the loan growth momentum is weak. However, the P&L is very strong for them. Versus our poll, the ANA and PAT is a beat on our poll. Deposit growth came in at 14% YoY and about 6% sequentially. YoY, it's one of the weakest growth that you are seeing in last 8 quarters. Now, advances growth were on the lower side at just 13.3% YoY and 2.1% quarter-on-quarter. So YoY, it's the weakest growth that you are seeing in last 17 quarters, and sequentially, that is quarter-on-quarter, you are seeing one of the weakest growth that is coming in 15 quarters. Net interest margin is at 5-quarter high of 4.41%. Core operating profit growth is at 5-quarter high of 13.7%. Now, quarterly annualized slippage ratio is at 17-quarter low of 1.5% versus 1.85% in the previous quarter. Their asset quality continues to show robust decline and is one of the best in last 10 years or even more for them. Gross NP ratio and net NP ratio have improved, with ROA or return on asset being the highest ever that they have recorded, north of 2.5% in this quarter. Back to you.
Okay, Abhishek, thank you so much for the roundup coming in for HDFC Bank as well as ICICI Bank in Q4. But let's listen into the management of both these banks as well, what they had to say in terms of the growth, outlook, what are they watching out for there? Listen in.
We've already seen 2 rate cuts, and the change in stance from neutral to accommodative is a welcome relief to all of us. RBI intends to increase durable liquidity, which is followed by concrete actions, which along with rate cuts will help supporting the GDP growth. For FY26, we expect the GDP to be supported by a pickup in rural spending, discretionary consumer demand, and investment activity. Of course, the goods exports may be impacted until the global trade and tariff situation becomes far more clearer. We acknowledge that the global macroeconomic outlook has become more uncertain due to the recent trade tariff-related measures and the volatility surrounding them. This may potentially impact global inflation, leading to lower growth across economies. Corporates have adopted a wait-and-watch stance, and we are waiting for more clarity. We remain watchful. Our credit deposit ratio has been brought down from the highs at the time of merger, which was at about 110%, to around 96% as of March 2025. Our deposits have grown faster than the system, and so has it grown faster than our loans as well. Next year, in line with what we had committed, the adjustment in CD ratio will not be so steep, supporting the loan growth for the bank, but it will be on a downward path. Asset quality, one of our USPs, remains pristine. As liquidity and growth improve, we are well placed to grow in both assets and deposits.
So as far as the loan growth is concerned, I don't think anything specific incrementally in terms of caution on the credit side. I think we are pretty comfortable with what we are underwriting. Of course, on personal loans and cards, as you know, we had tightened, a few quarters ago, and that is showing up in the volumes over the last couple of quarters and the loan growth. But other than that, no specific caution on the credit side. I would say it's largely a function of what is happening in the system. And also, I guess, on the pricing side, some consciousness given that, during this quarter, we were at the sort of cusp of the, downward movement in benchmark rates. We have seen liquidity improve substantially over the last couple of months with all the measures that the central bank has taken. And deposit growth for us has continued to be quite strong. You would have seen the numbers for the fourth quarter have also been pretty strong for us. So, as the rate, now, of course, if you look at it, the repo rate has fallen by 50 bips. So that will start to see a transmission into deposit rates, which is what has started. So I think that's, in the natural course of things.
Okay, that's all about HDFC Bank as well as ICICI Bank. But